So we have something like this on the daily time frame where we saw this bearish impulse leg, very solid. And since the impulse leg began in February, we saw that price have been finding it difficult to push below 1.871 area. As immediately after testing 1.871 area, we began to see higher lows and higher highs. However, this look more like a reversal setup to me. If you look at it, probably price will be going up from this area. But putting into consideration the long-term scenario we have here, which is very bearish, then we might be looking at a possibility that this move might be a retracement phase of the impulse leg we identified earlier. So if that is the case, after every impulse leg we expect a retracement into our golden zone area, which is around, if we bring out our Fibonacci retracement tool and we check what's happening, we have a retracement right around 786 and 50% retracement whatsoever. Oh, I think our impulse leg will start right from this area. Yes, so we have 786 and 50% retracement. So since this is supply zone, we give it a red color. Okay, and I like to label this supply zone, label this is supply zone, and delete the retracement tool. And if you look closely into what has been happening since the beginning of March, we can see that as soon as price got into the 50% retracement of the impulse leg, we began to see rejections, multiple rejection that looks more like a double top structure, probably more going to evolve into a head and shoulder pattern, after which we see a breakdown of structure sending price to the downside. However, it is pertinent that we don't ignore the fact that this can also be a breakout, can also be a reversal setup that will send price going to the upside. So to be on the safer side and to be more clearer on this, it is pertinent that we look for a key level we can work around with. So if we look left and pull out our line chart, we want to identify a key level right at an area where the support and resistance at one point in time merge. So if we look closely, we look left, we can see that we have something like this around 1.927 area, which okay, yes, 1.927 area, which shall be our key level at this point. So let's label this key level at 1.927, and let's put it right at the top. I'll make it a little bit visible. Good. So we have something like this as our key level, and if we look left, you can see we saw a rejection at this area, we saw a rejection at this area, a breakout of structure at this area, then we saw multiple rejection, we saw a breakdown, then multiple rejection in this area, we witnessed a breakout of structure on the mid-April, and then since that time we've been seeing a breakdown, multiple rejection of this area at this point. So this emphasizes the strength of that key level, as it has determined price movement, since if as soon as price touches or comes through that area. So in this regard, finding a supply zone around this area, which I see as a retracement of this impulse leg, then we will be looking for structures that will send us going to the downside. So to be on the safer side and to be more conscious in taking a position on this trade, it is advisable that we have a position right below the key level as an opportunity to take advantage of this of this bearish move if it finally happens. So if we scale down to a much lower time frame, let's say the 2-hour time frame, as we can see what's happening here on the 2 hours time frame, we can see that we have the first thing we'll notice is that we have a bullish trend line. If I bring out my line chart, we can see that there is a bullish trend line at this point, you can see, which was broken. Then we can even extend this bullish trend line to something like this. Sorry, I think this is better. So bringing out our candlestick pattern, we can see that we had a breakdown of the trend line here. You can see we had trend continuation here, trend continuation here, trend continuation here, but the expansion was not that strong. If you see what happened, expansion was not that strong compared to what we had here and what we had here. So it gives us a clue that the buyers are actually losing momentum, as we can see the breakdown of structure of that trend line here to meet up with this new trend line down below here. We saw a double bottom structure here where push price further up again. Then we saw another breakdown of that trend line, giving us a clue into the strength of the sellers at this point, as you can see the breakdown and retest of structure at that point. So going back to the idea we had on the daily time frame, we want to be using this key level as our yardstick going forward. And if you look closely into what happened since we had that breakdown, during the course of yesterday's trading session, we saw breaking down here, we saw a rejection of that trend line, we saw further breakdown to the downside, then price came back to this area and we saw multiple rejection of this key level, which I think will probably send price going to the downside. So to be on the safer side, I said we should have an entry point right below the structure where we'll be looking to take advantage of a bearish move if it finally happens. So in that regard, we're going to be having something like this. We have around 90 pips. We are around 90 pips, and then where will our take profit target be? Let's move to a much higher time frame where we can see things more clearly and decide where our take profit target will be at this point. So looking left, I want to use my impulse leg from this area, which has a structure in the past, and then using this, extending this move from the supply zone. And how do we do that? We use our Fibonacci extension tool and run it through that impulse leg, as we can see here. Then we'll be having 127.2% as our next take profit target. And if you look at this is almost like 800 pips thereabout. This is a long-term scenario, but we want to be looking for a short-term setup where we can quickly take our profit and leave the market as soon as possible. So to do that, we want to look for something very, very prompt. And if we look left, let's look for structures we can play around with to determine where our take profit target will be. So if we look left, we can see that we had a reversal structure around here. We had a reversal structure around here where we had a retest of structure and a break to the upside. So we want to be looking for a neckline around here that we can play with. So if we bring out our retracement tool, we could look at this area and see that we have structures. We have a resistance level here and we have a support level here, which is enough for us to think there is a possibility that if price comes back to this level, it could probably send price going to the upside, or we see a setup that supports a trend continuation to the downside. So bringing out our candlestick pattern and moving this close to that area, we have around let's say around 230 pips thereabout. So let's move this 896 around 220 to 30 pips thereabout, with a stop loss of around 90 pips. If we, and mind you, it's still possible that we have a breakdown of this level we identify here, where we can actually, if possible, add more positions to our existing trade. So in that regard, this is what we have. Let me quickly make a summary on what our expectations are on this one. I said, since we had a breakdown of trend line here on the 25th of April of this trend line, and this second trend line, we had a breakdown, retest of this trend line during the course of yesterday and today. It's a sign that sellers are actually strong, as buyers appears to be losing the momentum that they have garnered over time. And if we look closely into what's happening on the 1 hour time frame, we can actually draw a trend line from this point that could also be our guide going forward. As you can see, we have the trend line here. Let's give a trend line red, and let's make it a little bit thicker so that we have a trend line right at that point that could be our guide going forward. So we have something like this. Price touched this trend line, rejected it, touched there, and increased expansion. Then we had another expansion here. Then price has come back into that trend line area with multiple rejection of that key level we see, which also shares a confluence with the trend line we've identified here. So we're looking forward to a move to the downside in that regard. So with this trend line here now, it's very likely, it's very possible that we can actually take a trade anytime soon, not waiting for this to trigger. We can move our entry to somewhere around here, so that our stop loss will be around 80 pips thereabout. So we can look at something around this area that will be having around 250 pips approximately take profit target. So this is this on GBP New Zealand.